Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormis Patakia and Reema Tendulkar. Hey guys, good morning. We've been talking about that Trump tariff statement that came by last night, and that's all we've spoken about. But right now, what we need to speak about that recovery that we're seeing in the markets. Nifty was down around 0.7% just a while back. It's down 0.4% right now. So you should watch out for that one. There's been a recovery which is underway. We are around 125 points off the lows of the day. Nifty FMCG is the one which is contributing. That index is up 1.5%. We had HUL's numbers just a while back. That stock is the top gainer. That should come up for you on the screen as well. That is supporting the gains that we are seeing on the Nifty currently. This hour itself, we have seen recovery come by. We have JSW Steel. There's Reliance Industries, which is also batting for the bulls, and some recovery in Nifty Bank as well. That is something that we should be watching out for. All these names batting it up for the bulls, and we'll have to see whether there's a bigger impact of this tariff that Trump has announced, whether we'll see more negotiations. That's all we can talk about today.
Indeed, but we've got lots of corporate conversations lined up on the show. So straight away, let's get to it. First up is Sonata Software. The company has two businesses. One is the international IT businesses, which is basically your IT services business, where the dollar revenue has gone up by 0.6%. But in constant currency terms, it is a degrowth by nearly 0.9%. And the rest is the domestic business. Samir Dheer, CEO and MD at Sonata Software, is now with us on the show. Samir, morning, and thanks for joining in. This is Reema here. So first, explain to us on the top line. In constant currency, it's still a degrowth. And when we spoke to you last time, you sort of were indicating that in Q4 things were weak because of the top client, but things were starting to turn around. So what happened exactly in Q1, and should we expect growth in Q2? How is Q3, Q4 going to shape up? Give us the guidance.
Sure. Riva, first of all, I think it's been a very interesting quarter for us. This is a quarter where we saw some significant tailwinds and also some significant headwinds. The tailwinds really came from the large deal that we announced. I think if you recall, back in April, we had announced a large deal of $73 million. So I think the deal got nearly fully ramped up in the course of the quarter. And I think in the current quarter, it'll get fully materializing. So I think that gave us a tailwind, which I think was very substantial and very nice. The second tailwind we got was from our continued success in our banking, financial services, and our healthcare customers. I think that really continued to grow Sonata in a positive momentum. I think that was very nice. And the third, in general, we have been making significant progress in our data and AI business. I think that has really helped us scale the business forward. So I think those are sort of three strong tailwinds in the course of the quarter. And these tailwinds are not a surprise because we made investments in these areas, large deals. We made investments in data and AI. We made investments in banking, financial services, and healthcare. So I think it's a culmination of our sustained strategy to get these tailwinds. But we also had headwinds which were compounding. First of all, the biggest headwind we got was from retail manufacturing side. Earlier you were talking about the tariff impact. So I think we saw some tariff impact come through in our retail manufacturing vertical. The clients really pulled back the spend. Some of the existing in-flight projects were stalled and decision delayed. So that really was a surprising effect because, as you know, the tariffs went in around first week of April. The cascading impact of them kept trickling in the course of the quarter. So I think that definitely had a negative impact from a retail manufacturing perspective. And second, the large tech client and one of the large banking client, very isolated cases. Those are going soft, but those are very client-specific issues, but not really an industry issue. So I think a combination of the positives that we had and the negatives we saw, which really we could not have envisaged when we talked last time, that the impact of tariff was not very visible, but now it's beginning to get visible, especially in our retail manufacturing business.
So retail manufacturing and certain isolated client-specific pauses in BFSI, correct?
BFSI and tech.
BFSI and high tech, got it. And what about Q2, Mr. Dheer? Because it appears the uncertainty still lingers on. Have you seen any sort of an improvement, or is Q2 going to be a negative growth quarter for you?
So we, as you know, we don't guide for the forward-looking quarters, but I think it's pretty much the same continuation. I think the tailwinds that we had from the three positives will continue in the quarter. The headwinds from these two items are also going to continue in the quarter. I think very, very difficult to quantify the net impact that will have finally on the quarter. We are still working through it. It's only nearly a month into the quarter. But I think that's where we see that the tailwinds and the headwinds will continue. We hope this tariff thing stabilizes as we move forward, and hence we can get retail back on track. But that will take at least a quarter or two before retail will come back on track after the tariff situation is stabilized, which, as you know, is very hard to predict when this thing stabilizes. Is really a $1 million question out there right now.
So you're not really seeing any improvement in Q2 versus Q1. As things stand right now, it should be similar, correct? Just to summarize.
We expect, like I said, the tailwinds and the headwinds are continuing. It's a marginal on the edges, some positive.
Got it. What about margins, Mr. Dheer? Because last time you spoke about trying to get back to 20% plus in Q1, Q2. But the international business margins are still where they are.
I think the reason, because some of the unexpected ramp downs that happened, as you know, the business is not very elastic. So when you have ramp down, the revenue goes away faster than you can take the cost out, and the cost takes time to redeploy. So some of these negative headwinds and margin are a continuation of that. So I think our aspiration, like we said before, is to get to low 20s EBITDA profile over a period of time. I think we'll continue to work on that. Once this macroeconomic uncertainty stabilizes, I think this 1 or 2% surprise that we see in the quarter will hopefully subside down. But till the time the market is unpredictable a little bit, I think we'll continue to see that volatility even in a bottom line. And it trickles really from the top line largely, because the top line goes away and then you have to manage the cost in the course of the quarter.
Okay, we'll leave the conversation here. Mr. Dheer, thank you very much for joining in. Get into a break. On the other side, the management of Punjab National Bank will join in to discuss the Q1 numbers.
Welcome back. Continuing with corporate conversations then, just as the market continues to recover from the lows of the day, Punjab National Bank is the next management on the show. The growth was strong. NIIs were up just 1% from last year, but the loan growth was below the management's guidance. Ashok Chandra, who is the MD and CEO at PNB, is joining in to discuss the quarter gone by. Mr. Chandra, good morning. Thank you for joining in. You had guided for your loan growth to be at certain levels. It's come in below the guided range, but do you believe that there is a recovery on the annual in the subsequent quarters and you would be able to meet your loan growth guidance for the full year?
Yeah, loan growth guidance we had given for 11 to 12% for the entire year for the FY 25-26. And this year, the segment-wise, if you see the growth which has happened, like MSME sector has grown at 18%. Core retail has grown at 17.7%. So there are segments where the good growth has happened, and that was the focus area for the bank also. A lot of activities which we had started, and we are also aiming that this RAM growth should grow at 16-17%, and that we are able to achieve that. So area where we have missed out is the corporate loan book, and we were conscious of the fact that whatever growth we are doing it in the corporate loan book, I think that corporate book should contribute good in the yield part now. So there are certain low yielding advances under the corporate book was there, which we have set out. And because of that, there is a muted growth in the corporate loan book. But I can give you the figure. We have 1,29,000 crore of sanctioned book, for which the documentations are also done now. And we are expecting that disbursements are going to happen in that corporate loan book also. Some disbursements have already happened, and some is going to happen in the Q2 and Q3. You know that many of the project loans which PNB is sourcing that, the lag time is there for the disbursement. Generally, the project loan, it takes one...
Yeah, got it, sir. So actually, we got your point about loan growth. The market would be a little more worried about net interest margins because one big rate cut came in June. That has yet to be absorbed. So should we expect that in Q2 also another 11 basis can go off in the NIMs?
See, we have the global NIM is 2.7%. And if you see our domestic NIM, that is 2.84%. So I'm expecting that in the Q2, I think we will be in somewhere between 2.7 to 2.8% in the domestic. And in fact, we are mindful that overseas, whatever the advances we have done, I think there we are facing some the stress in the margin front. So there we are going to look forward and see that how much adjustments we can do that. But definitely, I think between 2.7 to 2.8, we will be holding on in the Q2 also.
No, in the domestic, but
in the
overall,
domestic and overall also, because we have made some adjustment in the cost of deposit also. The deposits are also repriced now, and that impact also will start seeing in this quarter also. If you see my cost of deposit, some 3 basis point it has come down, and that was only 1 month impact. So I think in this quarter, the full impact will be there for the 3 months now. So I'm hopeful that 2.7 to 2.8, definitely I should be in a position to hold on this.
Okay, so 2.7 is the lowest in terms of global NIMs. Okay, that's good to hear, sir. Your credit cost is, I mean, you should get a trophy for it. It is the lowest in the industry, I would think. 14 basis points of credit cost. It can't go lower, no? Should we accept that?
Yes.
That it can inch up a bit this quarter?
No, I think the guidance also which we have given 0.5%, and definitely we are well below that, and we will continue to hold on. The advantage is that since our PCR is 96%, and even the tangible PCR, excluding that technical write-off, that is also around a 90% plus now. So today, whatever recovery we are doing it is adding to my write-back of provision or going directly to the operating profit if it is recovered in the technical write-off. So that is one advantage is there for us. And despite having challenges in the Q1, we have made the recovery of 3,300 crore. So if you calculate 90% the write back of provision, I think a good write back is happening in the system now. So that
what is the recoveries guidance for the year?
We have given the guidance of 16,000 crore in the entire year. And this quarter itself, 3,300 crore we have recovered. There was one big account was to be recovered in the Q1, which has happened in the July month now. That is a big recovery that has happened. So definitely that benefit will come in the Q2 now.
Okay. Do you want to explain? I mean, I think all of us have understood that you have taken a 3,300 crore rupee hit as a one-time tax hit. But yes. Can you want to briefly explain that to the viewers?
Yeah, absolutely, madam. I think this is a very right point and right opportunity for me to explain the things. Old tax to new tax regime, we thought that this is the right time because whatever the benefit which we were supposed to get out of the MAT, as on 31st March 25, we have exhausted everything. And this is the right time for us to move from old tax to new tax regime. So when we decided, and board also decided and gave the permission to go for that, then we thought that let us do it in the first quarter itself, because whenever we do that, that has to happen in the first quarter itself. So the DTA recalculation has happened because earlier the DTA calculation was at 34.94%. And when we are doing that new tax regime, this is at 25.16%. So that difference of that calculation has made a hit of 3,324 crore as a one-time provision for the income tax. And if you add that 3,324 plus this year at 25.16% tax, it comes to 1,750. Both, if you add, it comes to 5,083 crore as the tax outgo in this particular quarter. So if you see my PBT, it is very good. It is 6,758 crore. So I'm expecting that after migrating to the new tax regime, there will be a benefit of 10% in the operating, the net profit out of this operating profit. And going forward, I think 7,000 crore plus will be our operating profit. So Q2 onwards, straight away, we are going to have a benefit of around 700 crore in the net profit just because migrating to the new tax regime. So I think that is the comfort I want to give to all the stakeholders.
Sir. Yeah, got that, sir.
And with that, one more point, 16 basis point ROA is going to improve with migration to the new tax regime.
That's big. That's big. Actually, the adjusted ROA is 1%, although unadjusted, it would look like 0.3%. That's only because of the tax one-time hit. A final question, sir, on this SMA2. A bit worrying, I mean, compared to Q4, SMA2 numbers have risen. I mean, for those of you who don't care for this abbreviation, it means those loans which have not which are over 60 days past their due date. That's always a worry because they can slip into NPA. Should we worry that the 14 basis credit cost will now have to increase to probably 20 or 25 because of this SMA loan being high?
Madam, if you see our slippages ratio for this quarter, and if I extrapolate for the entire year, it comes to 0.71%. And I can give the comfort that 100 crore and above, none of the loan book is under stress now. Even SMA 0 also, none of the corporate book is there under that SMA 0. So absolutely nothing to worry about it. In that, this year also, this quarter, 1,800 crore which has slipped, mainly it has happened in the MSME segment, that is around 964 crore. And retail, it is 400 crore, and agri, it is 300 crore. So all put together, nothing has slipped in the corporate loan book. And we are going to hold on to this figure quarter to quarter. Our slippages in every quarter, we are expecting it should not cross more than 1,800 to 1,900 crore.
Okay.
So absolutely, there is no challenge as far as the fresh slippages is concerned.
Okay, got that. Actually, sir, we have lots more questions, but your results have come on a day when it is very busy both for the macro economy and for the results. But thank you very much indeed for clarifying some of the doubts that, investors may have.
Okay.
Over to you, sir.
All right, Lata, thank you for taking us through that conversation, and thank you to the management of PNB as well. With that, we'll take a break. But before that, let's cut across to the HUL presser. We have commentary coming in from the management.
In this quarter results, it's in exactly the same shape as we would have expected it, and we are very committed as a company to continuously stay on that path of investing for the future, and because we know that it's generating results. So I feel it's about the right time. We have a very good, ready successor. Priya is another homegrown talent like me. She has spent more than a quarter century in the company. She's been on the management committee for 7 years, on the Unilever executive for 4 years. She's headed big global businesses, B&W, or Beauty and Wellbeing. You know that 2 years ago, I split the division and made B&W a specific division because that's really a driver of value growth. So she's also therefore absolutely well casted to drive that forward. And, our talent bench is seamless, whether it be functions or in the general management. We always are grooming people, and she was ready, and I was ready, and therefore we've taken the decision. So it's a well-considered, deliberated, thoughtful decision. Both of us are lifers in a sense of this company, and I'm cheering for her and the company, and I'm feeling pretty good about charting my next path, and also feeling good that Priya's in charge.
Right. And Mr. Tiwari, we've also heard that you are probably also going to be moving on to a global role going forward. Also, if you could tell us, is that happening? What is the plan there?
Yeah. As you see, I continue to be CFO of Hindustan Unilever. And if and when there's any announcement to be done, we will inform. For now, I'm very clearly focused on my key priorities. Number one is to drive the growth of the business and to support Priya as she lands in the business as a new CEO.
Ritesh and Rohit, both of you, congratulations. I think, we were discussing earlier also that HUL is the only counter that's keeping the Nifty in check today, and that's reflected in the results as well. Just want to get a sense on the volume growth, because this quarter there's been volume recovery and it's a good quarter per se. You're saying that, the price growth going forward is going to be in, the single digits. So do you think that volume growth from now will be better than what you've done this quarter? Because there are clear signs of rural picking up. There are FMCG companies that have gone ahead and said that, there are urban green shoots that also are being seen. So volume growth, can we expect that to be in high single digits going forward?
See, overall, as I mentioned that over the last almost 12 months' time, it's a stable atmosphere where we've seen improvement over the last few years and especially last 12 months' time, and that consumption climates remain stable. We are seeing some uptick in last 3 months' time. More, of course, we have to understand that. Rural continues to be encouraging. So all the economical factors which are supporting growth are present. We expect the improvement to be sustained. And overall, if I talk about the growth of Hindustan Unilever, since the outlook for pricing is low single digit, commodities are range bound. So the growth will be volume led. And we are always very clear that when we drive growth, growth has to be competitive, which means growth ahead of the market. We spoke in the current results that the growth has been competitive. We gained turnover basis market share, not only in last 12 months time, but also in last 5 years time. And that's a pretty strong performance, and that remains the focus for us. So expect sustained gradual recovery and we have to ensure that as HUL we keep growing ahead of the market and keep gaining share.
And if I may, just so what Pritesh spoke about is the macro, right? And we said that last time also, that we expected macro, all the actions taken by the government, and with inflation being so, at 2% levels, we are investing for that macro, right? And we were investing ahead of the curve. There are also strongly internal factors. We are driving the growth by allocating resources to our future core and market makers portfolio, and to future growth channels. So we see us doing quite well in those spaces. So, and that's a large part of our business now. And increasingly every quarter, as that proportion gets bigger, the growth of our total average growth will start to become even more, I would say, easier, because we'll be in the faster growth spaces. So it's not a one quarter thing. So we're very happy with this quarter results, right? But there'd be good quarters, bad quarters, average quarters. We will stay on this path. And it's the strategic consistency, the long-term nature of this game you should expect from HUL, because we are fighting for the big future where every category that we operate in is a low per capitas. All categories are premiumizing. People are improving their quality of life. So we are betting on a prosperous, developed India, not just only for short term. So I'm just appealing all of you to sort of look at the long-term opportunity in this market that remains extremely exciting. Probably the only market of this scale in the world that will continue to be of this attraction for many, many years going forwards.
Just follow up on the leadership change that you were talking about. You've known Priya for quite a while now. Just want to get a sense that is there going to be some change in terms of how strategy will be adopted by her? Because leadership could be different for different people. Any kind of color there? If there are early signs of picking up there.
So I think let me just take that question. So look, the strategy is about moving our business to faster growth spaces and faster growth channels, benefits, brands, segments, channels. So, I mean, it's very obvious, fact that's you should basically go where growth is. So I don't think that's going to change. The color and shape of the specific nuances, they have to be in line with the changing conditions. So we should never call strategy as it's not a fixed thing. It's evolutionary. But the broad direction of competitive volume-led growth is what we're going for. As you said, price growth will be lower than, say, in the past. We're going for growing in the faster growth channels and benefit segments. We are about increasing the premiumization of our portfolio. That is continuously increasing. In fact, the last 2 years that I've been in this role itself, we've moved our portfolio by almost 5% more towards future core and market makers. And that just shows you the direction of travel. And I'm quite certain that's going to remain Priya's focus. Specifics of all of this will have to be customized to the conditions she will find herself in the quarters in the years to come.
रोहित सर, मेरा सवाल आपसे है. 37 ईयर आपने HUL को दिया और
HUL ने भी मुझे दिया 37
अभी फिलहाल करंट सिनेरियो में जो प्रोडक्ट पोर्टफोलियो है वो किस सेगमेंट या कैटेगरी की सबसे अधिक डिमांड है? अगर आपको पिक करना हो, कौन सा वो प्रोडक्ट है जिसने HUL को एक नई पहचान दी?
पहली बात तो हम यहाँ पे 91 साल से ज़्यादा हैं हिंदुस्तान में, तो नई पहचान, हमारी पहचान हर साल और बढ़ती है. और दूसरी बात ये है कि ये पहला क्वार्टर है काफ़ी क्वार्टर्स के बाद जहाँ हमारे सारे बिजनेसेस ब्रॉड बेस्ड ग्रो किए हैं, वॉल्यूम और वैल्यू कंपेरेटिवली ग्रो किए हैं. हर ब्रांड नहीं ग्रो किया, बट चारों बिजनेसेस जो हैं हेल्दी हैं और ग्रो किए हैं. और वही हम चाहते हैं कि हर क्वार्टर में ऐसा ही होता रहे. और हमारी जो बड़ी कैटेगरीज हैं, स्किन क्लेंजिंग है, चाय है, हेयर है, लॉन्ड्री है, वो भी जो है सारे के सारे ग्रो किए. इसीलिए जो है कंपनी का ग्रोथ जो है वो अच्छा हुआ इस क्वार्टर. वही हम चाहते हैं कि हमारे सारे बिजनेसेस एक साथ डिलीवर करें. एक ब्रांड या एक बिजनेस से ये इतनी बड़ी 65,000 करोड़ की कंपनी नहीं चल सकती. All 4 engines have to go fast for the whole jumbo jet to keep flying it to greater heights.
Just a second, if I could, just a follow-up on that. Wanted to get a sense on two things. First, on the margin, and second, on oral care. Let's start by talking about margins. Because last quarter when we were here, there was a slight downtick in your guidance, but this time around that's been maintained between 22 to 23%. Are we looking more confident on the margin fronts going ahead? And second, on oral care, while you've seen mid-single digit growth here, a competitor in this space recently has not given.
All right, that's the commentary coming in from HWell. The stock is top gainer on Nifty today. But with that, we'll slip into a short break. A reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC-TV18 Access, our premium members only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
Welcome back. Let's now put the spotlight on the top movers in the market at this hour. Hormis has moved over to the big wall. Hormis?
Well, result reactions, tariff reactions, all of them coming together in today's session. So we'll combine all of them and address some of these movers today. Pearl Global, one of the many textile companies that have faced a negative reaction in today's session, now almost 8% lower. And interestingly, the stock was up 7% yesterday and another 2% the day before. So it's given up gains of the last two trading sessions. The stock has also declined on heavy volumes as well. 50% of its top line comes from the US market, and already 2 lakh shares have traded at this time of the day compared to its 20-day average of just 22,000 shares. The result reaction is Green Panel Industries, and at one point the stock was down 10%. We've seen a slight recovery from the lows of the day. The stock has already declined in 3 out of the last 4 trading sessions, and 5 lakh shares have already changed hands by this time, the first couple of hours of trade, compared to a 20-day average of 1.7 lakh. Greaves Cotton is the other one. The stock reported results yesterday, was up yesterday and is building onto those gains now, 15% higher on the stock. Third day of gains on a consecutive basis. 2.5 crore shares have already changed hands for Greaves Cotton, and a 20-day average is just close to 6 lakh. But despite this move, the stock is still down 15% year to date, which might just turn out to be the first negative year the stock has had after 2020. And the other earnings reaction is Navin Fluorine. The stock is up almost 70% now this year, and this is turning out to be the first positive year for Navin Fluorine after 3 back-to-back negative years. And this is the 4th day of gains as well for the stock on the back of very strong volumes. 6 lakh shares have changed hands so far compared to a 20-day average of just 40,000 shares.
Okay, all right. Interesting names there. And while we are seeing those buzzing names, Nifty has recovered 170 points from the lows of the day. So just watch out for that one. There's a sharp surge from the lows. But with that, we'll slip into a short break now. When we come back, we bring you excerpts from our conversation with Infosys CEO and MD Salil Parekh. Welcome back. In an exclusive conversation with CNBC-TV18, Infosys CEO and MD Salil Parekh laid the roadmap for how the tech giant plans to navigate the future and readapt to the AI challenge. Listen in.
A lot of clients are selecting Infosys as they go through consolidation decisions. So all of that gave us a good traction and gave us the growth with which we increased our growth guidance for the full year. In terms of recruitment, we had a strong recruitment in the first quarter, over 17,000 employees, both lateral and from colleges. And our plan for the full year is to recruit 20,000 college graduates, and that continues. We have always have a view onto what type of acquisitions we want to look at, and AI is very much into that strategic domain where we will continue to look. We've then made several investments in reskilling all of our people. So about 275,000 people have been reskilled within Infosys into different levels of AI.
Look at the recovery that the index has made from the opening lows. Now just 40 points lower on the Nifty, on the verge of turning positive now on the monthly expiry day. You pull up the contributors chart and it will give you an idea of which are those names that are pulling the index higher. It's an almost 170 point recovery from the intraday lows, and the good part is that we have not broken below the recent swing low, which was 24,598, is from where we reversed, and even today's intraday low is higher than those levels. Of course, HUL leading the pack, ITC reporting results tomorrow, that too in tandem with HUL is contributing to the moves as well, and Reliance Industries also looking to recover from the lows of the day. Take a short break. On the other side, we get discussing with all things commodities. Manisha joins in on the other side.
Welcome back. Let's turn our attention now to the commodity markets. Manisha is now joining in and she's got her eye on metals. Manisha.
Well, it's all about tariffs, really, and that's what's impacting the metal as a sector as well. If you look at the copper prices, especially in the US, we've seen 18 to 20% of a decline at one point in time in the New York session yesterday. This is after there's more clarity emerging on when the tariffs of 50% on copper take effect on 1st of August, what really are going to be the details here. So the understanding says that the refined copper imports into US are going to be excluded from this list. And refined copper clearly is the most important part of it all, because nearly 50% of what US needs is an imported number in sense of refined copper, and that has been excluded, and that's what's taken the prices sharply on the lower side. In the last 4 or 5 months, we've seen a lot of copper being imported into US. It has been trading on a premium to LME. All of that also cleared off in the overnight markets there. One sharp red candle and a very sharp decline in the copper prices, so much so that this is the biggest one-day decline that we have seen come in for copper there. Also, tariffs will be reviewed in July 2026, but until then, this is how it stays. And it's not just about copper, which also, by the way, has seen a decline in China and the London markets there. But the gold prices, after declining 1% overnight, are now trading at a one-month lows below $3,300 an ounce, a level that it has been holding for the last 3 months now. Silver fell 2% overnight. That one is trading at a 3-week lows. Platinum prices are down by 5% overnight. That is holding at a 4-week lows in the markets right now. Well, the US has kept interest rates unchanged in the US Fed meeting. That was on expected lines. But the US putting 25% tariffs on India, may not, India being one of the largest or the biggest growing countries right now. And that number also seems to be impacting metal prices within the Asian countries there. The other factor that's impacting is the dollar index, which is trading at a one-month highs, inching very close to that 100 level mark, is what is weighing on many of these dollar-denominated commodities.
All right, Manisha, thank you so much for joining in with all those updates. So with that, we'll slip into another break. When we come back, we'll get you more on the markets on the other side. Stay tuned for that.
Welcome back. Back above 24,800 on the Nifty. The recovery continues from the lows of the day. The broader markets too are looking to stage a bit of a rebound. The mid-cap index still down 500 points, but is recovering from the lows, led by the banking names, HUL and ITC. We take your leave on this edition of Trading Hour. From Rima, Sonal and me, thank you for watching. Halftime report on the other side.